which you and I both, I think, accurately predicted yesterday, which is we'll see a sharp move in one direction, and then we'll see a sharp move in the opposite direction. But that second move tends to be the real and the prolonged move that actually plays out for quite a bit longer. So, we got exactly what we were looking for, but at the same time, you and I were both kind of in a position where we couldn't let folks know, what to do for anybody who might have been wondering, if and when to take action.
That is correct. And
Yeah.
I think we had mentioned it many times. Usually the first reaction is the opposite reaction of what's going to happen. And it was exactly that yesterday. It started pumping and I was like, oh my God, this is so obvious. Let's go the other way.
Right.
But it pumped
Right.
high enough just to pull people away from many trades. And I believe Fun Trade was in the NVIDIA put side, and he realized that it was going on the wrong way, and he had to pull out of there to eventually see it turn around on him, and then it went to the downside. So what really was the telltale of the whole thing is, yes, SPY looked like it was breaking above the previous resistance. However, none of the other tickers were. Everything was still under resistance. And as soon as all of them started to hit resistance, if you're looking at all the heavyweight, look at Tesla, look at Amazon, look at Facebook, look at Microsoft, Apple, they were all reaching a point of resistance. So basically, when they reach resistance, they need to either consolidate. They're not going to break through that resistance without any effort. And when they reach that, they started to turn back down. And you have to be aware that the SPY can be traded, so there's volume on the ticker itself. However, it is made up of a 500 other tickers, which 5 or 6 of them are quarter of the weight. So as soon as they start to turn back down, this is when we saw that it was the time to go puts. But at that time, we were pretty much all blind or deaf. I know I could still see some people posting, but I was locked out, and I had at one point I could see something happen in the Discord. But after a little while, I was completely locked out. But things happen. We try to use a system that is easily available for everyone, and unfortunately, that thing needs maintenance at a wrong time. I don't know.
Yeah. Well, and I just posted this chart in the podcast discussion thread, but if you look at that 5-minute chart, even which again, that's kind of showing with the Neptune indicator on there, and it was basically testing the highest levels of where we're going to see selling pressure based on the hourly time frame. But that also had confluence with what I was looking at as sort of a key resistance level that we needed to break to potentially take calls yesterday, as far as here's the level to get into calls if we can confirm a break over this. And, that's the very level that we essentially had a very quick sort of double top rejection, basically 2 back-to-back 5-minute candles hit that level and almost the same price point to the penny. And then we sent things tumbling down from there, which again is pretty much exactly what we were expecting. I wasn't able to get quite as much profit out of the calls because those premiums after a big reaction like that are just sort of all over the place. So we did get out of the calls for profit though, and then we went on to ride the puts for significantly more profit than what we had taken earlier today. But I hope folks kept their limit orders in. I mean, I did mention in the chat, I've got a limit order. I've got 2 of these puts left from the free runners that we got early in the day. I had a limit order on one of those at 100%, which I mentioned in the chat. So I hope folks, kept that order in place, and then we closed out, or I was able to close out the last one for about 200%. But I had no way to let people know, and I was also having to look at the SPX and the ES charts versus SPY, because again, conveniently, like for whatever reason, the SPY chart on TradingView just wasn't working. So definitely weird activity yesterday, but I think we weathered the storm.
Now back to the straddle that you took. Even if you don't close at a limit order on the call side, um, you could have been compensated by the downside that was more than 100%. So
Right.
some people will just wait for the proper direction and just ignore the one that is going the wrong way, and then take the profit on the one that is more profitable in the end. And in situations like that, it was bound to move in a significant matter, not just stay flat. Obviously, if it stays flat, you lose on both sides. But on a day like yesterday, it was bound to move in a significant matter to the upside or to the downside. And some people will. What I'm trying to say is, some people will maybe, let's say you're looking at the reaction, you cut the downside right away, and then okay, it's going to the upside, and then it turns down on you and you realize that you're at lost on your upside as well. So you cut too quick the wrong direction, and the idea is to grab both sides after you are very positive about where we're going. But a lot of people were extremely bullish about the fact that they said they weren't raising the rates yesterday. So some people said, okay, that's us. That's how we're going. Let's move it to the upside. But not, because I believe a lot of people were expecting some sort of a policy about trying to tame this inflation that is kind of unseen before. So what do you think about
Yeah,
that? How do you think? I think we have 007 online as well.
we
We'll
do. I
come.
see him on with us. Welcome, 007. Good morning.
Good morning, guys. How you guys doing?
Doing
Excellent.
well. How are you?
Hanging in there? I'm good.
Good. Good.
Now,
So yeah,
what do
we had kind of talked about this a little bit in our preliminary discussions that we have in the mornings before we start up the podcast. And I was thinking as much. I didn't say as much because I don't I don't want to. I don't know. I just get worried about making statements that seem overly predictive. But I kind of felt like it almost wasn't going to matter what Jay Powell said yesterday. It was, he was kind of in a no win scenario. He was either going to come out and say we're going to attack inflation hard and fast, and we're going to, he's going to announce a higher than expected rate hike, and it's going to happen sooner than expected. So that's kind of option one, which again then that sends a signal to the markets that the cheap or free money faucet has been essentially cut off, and they're going to react negatively to that. Or he comes out and says something similar to what he actually said yesterday, which is we're not going to do this right away, but coming in March, we're going to do this slowly but surely. And then he talked about bringing down their balance sheet, and not being, I think he used the word less accommodative or something like that at some point. So that's also going to be received negatively. So I almost don't know what he could have said that would have created a positive reaction or catalyst.
what do you think, 007?
I mean, it's tough. There's really nothing you can say at this point. I talked a little bit about this on the stock watch list yesterday that, inflation rate is at 7%. The Fed naturally always wants to target inflation at max of 2%. So that's a 5% difference there, right? Um, and so we know, like, naturally on basic economic and monetary policy that they should increase the interest rate. We know that's a fact. That's the only thing they could do. And I think we know that there are 7 rates priced in right now for 2 years, at 0.25% increase. But the way they were talking about it yesterday, um, almost feel like the market is now pricing them to do the first rate increase at 0.5%, because where if you look at the 2-year yield, you can see that we moved up to like almost 1.2 today. Let me see. So let me see where 2-year yield is at. So 2 years are 1.18, right? So almost at 1.2. We were at 1.0 the other day, which means they're already pricing another extra 0.25%. At this point, they're really. I feel like they're really expecting the Fed to follow through, and it's starting to look kind of gloomy a little bit. And then if you look
Well,
at 2-year
go ahead.
yield from December, I'm sorry, go ahead.
Go ahead. No, go ahead. Go ahead.
If you look at 2-year yield from December or end of like November, right? It's around 0.5, 0.6 to now 1.18. That's a 0.75% increase in the 2-year difference. So we're already pricing in for 1.2 at this point for like a 2-year difference, and we haven't even raised any rate yet, So there's some thoughts there.
Now, can you explain, JTW, maybe what will be the effect of raising the rates to not the market itself, but to the companies? How does it affect companies themselves when we see rising rates?
Well, I mean, a lot of businesses, almost regardless of how uh, solvent they are. When I say solvent, how much free cash flow they have. There are plenty of businesses that would prefer to use low interest loans and stuff like that to continue to fund expansions and business operations and things like that. And so when the rates go up, the cost of them essentially borrowing that money becomes more expensive for them, right? Which can cause things to start to slow down. Maybe they don't, aren't as eager to expand because they want to wait for a more accommodative economy, or more accommodative interest rates. I mean, I don't. I think for the most part, it won't really hold things back that much because, I mean, interest rates are incredibly low right now, and I think most businesses that have been around for any period of time are used to rates being quite a bit higher than this. But I think that when you see rates drop down like that, which is sort of the intent of doing that, it triggers a lot of rapid economic expansion because everybody's like, well, we were thinking about doing this in a couple of years, but now's the time to do it because it's cheap to borrow the money. Same thing with like people refinancing homes and all that. I mean, it tends to generate a lot of activity in the economy, and so when that money goes back to being the same price it was before, now it no longer seems like a strike while the iron's hot scenario. At least that's the way I see it.
Well, I think the idea that you're sharing is we could see a contraction of the economy because we are setting companies to in a tighter situation. So we're not going to send you guys a complete course on the how this will affect the market and why and how, but the idea is for you to understand that when we're rising rates, basically we could see a contraction on some of the sectors, not all of them, because some sectors can benefit from that, right? And
Right.
which sectors will that be?
Well,
7?
that's I was gonna say that's a great question for 007. He's the detail guy.
What was the question?
I was saying that rising rates will see a contraction on some sectors of the economy, but some sectors will benefit from rising rates. And which sectors can that be?
That's hard to say. I think possibly the financial sector to a certain extent, but
Yeah.
with the current environment and everything going on, almost everybody is gonna get hurt from the rising rates because everyone is struggling with inflation issue as well. Sometimes, these rising rates benefit company with cash on hand, like consumer staples and things like that. But at the same time, these consumer staples company, think a company like Clorox, Walmart, or P&G and stuff like that, Procter and Gamble's, they're also having such an issue because they can't raise prices, right? Um, they have so many products, they have such a big portfolio, and they know consumers don't want to see that huge price increase, but they're getting choked from the supply chain side, so they can't do price increase either. And then interest rate isn't helping them, even though they're having cash. So a lot of companies are going to be losing across the board. There's really not going to be much that can come out of this alive. Even financials is going to have problems.
I saw some negative comments about the Fed not rising the rates yesterday, and a few of them were expecting at least quarter of a point rise. What do you think? Some people, and here's a quote from a guy from the George Mason University. He said, "Inflation is burning out of control, and the Fed is just sitting there and staring at fascination." So, do you think that a lot of economists are saying that this is like a burning fire and they're not doing much? How do you think people will see the reaction eventually when we see comments like that coming out from economists? 007, do you think Jay Powell has been just freshly reelected? Do you think people will start losing faith in, going in the wrong direction? Or do you think people will still trust him and stay behind him?
I feel like they almost reelected him just to kind of make him take the fall for everything he said last year. you know, uh,
That's not a bad theory, really.
because I know like last year I was extremely pissed that he wouldn't raise the interest rates, and for the longest time, even in 2020, we kept talking about doing a 0.25% increase in 2021. Remember, even in earlier 2020, he was pretty pissed about dropping interest rate to zero, and then Trump said he was going to fire him, and then eventually Jerome Powell unfolded, and he literally you know, just did whatever to support the market that he could, right? And and now, and then throughout whole 2020 to 2021, everybody knew inflation was an issue because the Fed had printed so much money supply. But Powell was like, it's transitory. It's gonna go away. Don't worry about it. It's gonna pass. It's like a storm. It's gonna be quick. It's gonna be gone. Don't worry about it. Um, and then inflation ended up staying for so long that we saw it across the board. Every small business caught up to inflation.
Now, I like your comment here. We economists like to say like to see things and analyze things after the fact. I'm the first one to say how to do it is just amazing. They look at what happened. And they can tell you exactly why and when and the reason behind the whole thing, but they can't really predict what's going to happen before it does. They're good at saying what happened after the fact, but not always as good as predicting what's going to happen. And you're just saying everyone is like, no, it's okay. We're not going to see such a fall. But what if in February 2020 they had told us, be careful, we have this pandemic that will last over 2 years, and we will have inflation go through the roof at 7%, and basically the world economy will be driven by fake money. And how would you think the rest of the market would have reacted to that? Aren't they trying to make things right before the storm? Or trying to calm everyone down? isn't it their goal or their role to calm people, maybe just like on a plane, the flight attendants trying to stay calm and don't panic, and the plane's on fire, but don't worry, we're going to land, or maybe
This
not,
is fine.
Yeah, this is fine. Stay seated.
Yeah,
Yeah,
you're right.
well, go ahead, Double Seven.
I was gonna say he's right. They're always trying to calm people. Percent.
Yeah. Well, and even if they didn't come out and say it, if you look at what institutions did as that picture that you just described started to become clear, and they could kind of they could see the dominoes falling from there. I mean, they reacted as if that what was said, even though it was not. It was more of a calming type message and tone that this is all temporary. We're going to bounce back in no time. No big deal. The market immediately priced in this whole scenario to be much much more protracted and much worse than they were out saying to the public. So I think we saw the level of reaction that would have happened if if they just came out and outright said what you described. Except for I think you probably would have seen retail traders also be a little bit more quick to react if they had come and just said that outright, which would have probably maybe made that the COVID drop a little bit worse, but probably not significantly.
007, you're a big fan of looking back at charts, looking at events. We can go back to 2008, 2009, back to 2015, even early 2018, I believe. We always have an event that will trigger something in the market, and then we will rise back from there. That COVID was unexpected, but it's part of the circle of life, and it's just happening. The market is just going to get hit with events that are out there, and now we have another event just to make it even more challenging. Whatever the situation is happening in Europe, Ukraine, and Russia, trying to shake things up a little bit. I don't want to get into a political conversation here, but how can that affect the market right now, and how can we make the most of this situation?
I know from trading in the past that anytime there is a war or when they do declare war, um, naturally that usually is a pretty bearish catalyst to the market as well, and sometimes that also cause a big drop in the market anytime there's a world conflict. But if we look at history, like 1920s, um, sometimes you need war to get us out of recession.
Well, I was just thinking that actually, but you kind of wonder a little bit though. Would that be the same scenario today, right? Because it's not like we're going to see a bunch of out of work people all of a sudden go to work, in converted automobile factories to make tanks and mortar shells and that kind of stuff like we had back then. It's now there's the military industrial complex, and it's these mega defense contractors who are already, I think, I don't think they're going to ramp up employment or anything like that to have to deal with a spike in political tensions, or if we actually did get into a hot war where there's actual shots fired. I wonder how that would, but to your point, I think it's still in its own ways will stimulate some form of economic activity and growth.
Now,
But you wonder if the scenario would play out the same today as it did back then. But I was thinking the exact same thing.
but like 007 was saying, we have defense stocks, and like you're saying, we have defense companies that are working hard at making accessories to that war or attention. And just to let a few just to help a few of the new members out. Defense stocks are Raytheon, which are RTX, I believe. There's Lockheed Martin, which is LMT. To a certain extent, we have BA because of their F-35s. However, were they reporting or are they reporting? I think they're reporting this week. I didn't really follow the BA earnings. But and what other tickers are there for defense stocks?
Well, Amy already hit this one in the discussion thread, but Northrop Grumman's a big one, which is NOC,
Correct.
Northrop
Yeah.
Grumman Corporation.
Yeah.
That's another big one, and they actually, it looks like, I was just pulling up their chart. It looks like they just had earnings. Like maybe it was this morning or yesterday after market. Yeah, this morning.
Yeah.
At least that's what the trading view chart says.
LMT was 2 days ago. You guys probably noticed we played LMT yesterday, and I posted a video on why and how, and back to the drop. And if you want to play on support, it's a quick view. Have a look at the Education Post channel where we have videos on how to draw lines and set up alerts. It's pretty simple. And that one was pretty much textbook if you followed it. But the LMT is one that I play because I really like it. But other than that, we're just saying that in a situation like this, I mean, yes, you play the VIX, you can play the VIX, you can play UVXY because of fear, tension, but they are tickers that are going to benefit from such tensions. And thanks, Amy, for sharing that with us. And yeah, I just
KLQ just dropped a comprehensive list. Of course, the ladies of X Trades are all over this. They're just like, they're prepared. They've got their spreadsheets. They've got their PowerPoints. They're like, just ask me a question. I'm ready.
Now, we've been saying this for quite a while, and I really always admire. Look at that, KLQ. Thank you very much for sharing that.
Yeah, she brought up a couple I forgot about.
Yeah.
So, props to her.
L3 Harris. I forgot about that one.
Yeah.
Yeah, and other than that, the idea is to look at, I think Time Hawk was talking about seasonality, to a certain extent. I think Amy is talking about moon phase. Yeah, I'm just making just fun of that. I really enjoy it because every time I see a full moon, I look at the market and I try to see a correlation. I think that's really interesting because I'm sure a lot of people will follow that, and I'm not joking about it. The current this morning, what do you guys see? I mean, it was pulling back hard yesterday overnight. A lot of people were kind of scared of the morning. And what do you guys see this morning?
007, you want to kick that one off?
For me, I'm still looking at financials for opportunities. That's still a sector that I really like because it's so slow. JPM specifically, still looking for a possible recovery in Target with the acquisition on Kohl's the other day by another company. So I think a lot of the retail sector might start to move to the upside a little bit. But that's pretty much it for me. Apple maybe we'll get a run into earnings, but I'm kind of scared to play a lot of the techs right now. What about you guys?
JTW, are you still there?
Yeah, I'm back. Sorry,
I think JTW, I don't know if you guys knew, but we were talking about him having snow the other day, and I think now he's the owner of a shovel.
Yes, I own my first snow shovel. I can proudly say. Although I did not buy it because it's just going to take up space for the one time every 5 years we actually see a little bit of the white stuff.
Anyways, so we were discussing about what you were watching this morning.
Yeah, well, we did have, gosh, what was it? What was the data that just came out this morning? Sorry, I wound up
We
having
had
to.
jobless claims. We had continuing jobless claims. U.S. GDP,
Yeah, that was
durable goods.
yeah, that came back better than expected. The GDP, and SPY looks like it's trying to turn up a little bit this morning, but again, I'm still pretty firm in the belief that, and I posted a chart to this effect in the options watch list channel if anybody wants to go check it out. Where I'm basically looking at SPY on the weekly chart. I got a couple of daily levels on there, and I've got a couple of areas highlighted. Right, there's a red area, a yellow area, and a green area. And we've already kind of attempted to bounce out of this red area, but it's I have a feeling we're going to break down below it. So I'd be looking for downside plays, or I think to 007's point, I mean, I think anything in the financial sector is going to most likely benefit from raising interest rates, because they make more money off of that as well. And defense tickers. I mean, if something actually does pop off, any of those are going to be good to jump into. But outside of that, I'm not really looking at a whole lot right now, as far as getting into a variety of tickers or plays or anything like that. I'm just kind of focusing on what I'm best at, which is trading SPY on a day-to-day basis, and finding opportunities to short those pops and hopefully catch some of these larger downside moves like we were able to do yesterday. Until we start to get into some of those more friendly buying areas that are on that SPY chart. Like if we dip down to that yellow level, that yellow zone that I've got on there, I'd be willing to say, okay, that's this could be close enough to the bottom, and let's jump in. If we get anywhere into that green zone, I almost don't care where we're at. I'm going to be going long on a lot of stuff. But as far as today, I'm still shorting the pops on SPY, and maybe going long on some of those sectors that we just talked about. Might be an opportunity if you're not comfortable playing the downside.
Right. I was locked out of Discord as of late yesterday, throughout the until the end of the day. But I was sharing, I don't know if it was with you, GTW, on text, but I was sharing with someone that I thought that this morning we'd open at a gap up to 440, and I just posted the chart where I saw resistance yesterday to 440. We are now 437.48. We closed at 433, so we're pretty much higher by 4 points than the close. I was expecting a rise from that drop yesterday. 007 shared with me a chart where he saw that we were a little overextended and we needed a healthy pullback. I'm on. I wish I'm more of a bull than a bear. You guys know that. I tend to think that we have seen a hard bottom on that 420. I agree with 007 saying that if we lose at 420, well, that's pretty much we throw the towel and it's going to go down to further out. But I still think that we have to try or test this resistance that we have on the a little higher. The reason for this is if I'm not saying market is rigged, but if all the big names and all the big institutions have their money stuck in the big names that are still reporting, and we have Apple, we have Amazon, we have Facebook that are still have to report. they will probably want to exit at a higher point than to exit when it's actually falling off a cliff. So I unfortunately I have to defer than you guys. I think we're going to go higher to my 440.44 line ish for a test, at least just to see if we have bulls in that sector. If we don't, yes, we will probably turn back down. But I still think that we need to test a higher level just to make sure that we don't find any bulls in that sector. But that's what I think. And the beauty about the market is no one can predict precisely what's going to happen beforehand. Just like Tesla, pretty much was. If you did any of you guys? I know JTW won't play Tesla for a reason. It's opening pretty much flat. It's only $11 from the close. Dude, it was this flat part is premium killing. If you guys look at the option prices, they were pretty high. People were playing 1,000, 1,100s because they were expecting a strong beat. I believe the numbers were pretty good. They said it was their best year so far. I mean, they've never made money before, and then they're just starting to make money. So yes, last year was it was obviously their best year so far. But 007, you're the king of earnings. How did you see their earnings, and what do you expect it to go from here?
Oh man, it's hard.
I'm just asking because it's a heavyweight in the S&P 500, and with them, they have reported. Microsoft reported, so that's two of them that out of the way. We have now Apple. I said Apple, Amazon, and Google. I have yet to report. We still have so I'm just questioning about where they are going to go. Are they going to hope or wait for the other earnings to start rising or dropping, or how do you see it go from here?
I mean, from a Tesla, from a 1-year basis, they're doing really good. Phenomenal 2021, 70% growth, right? On a 1-year basis. But when if you look at them on a 2-year basis, right, the company's probably grown like maybe like 170, 200%, give or take. Even though hitting the first historical profitable year for 2021. But at the same time, the stock was also trading at equivalent of $200 to almost $1,000, right? So they're already priced in for a 500% increase. Naturally, because the stock market is always forward-looking. But going forward to next year, going forward to 2022, this is one of the first quarters that Tesla actually acknowledged the supply chain issue. The previous quarter, they didn't really care about it that much. Like, man, we're gonna grind on numbers, we're gonna meet our goals, and we're gonna get it. But this quarter, they actually kind of put out a warning that says, hey, these results are gonna be based on supply chain issues, and it's gonna be dependent on it. So if we don't hit it, it's probably gonna be that. And they're also saying that they're going to only see a 50% growth year over year, and it's only natural because how many more times can the company keep hitting 100% growth year over year, right?
That's right. But, it's already well over exaggerated on the upside, just value-wise. Don't you think that the fact that it's saying that the growth will slow down is already priced in? Because, we've dropped down quite a bit. People know that growth will probably slow down. And weren't you the one commenting on the fact that they have already rolled out cars that were missing some parts, like USB ports that were to be installed after because they didn't have all the parts? Weren't you the one that shared that with us, or somebody else did? So that's going to cost them to have the cars back in and reinstall some of the missing parts.
I don't think that was me, but I know that I have shared before where they have issues with the panels and all that stuff. Um, like a lot of people get their Tesla and the panels and everything all messed up, and they have to like set up a service we call and everything to get it all fixed. I don't know if that's a grand scheme of Tesla where they get the recall and then when they deliver the vehicle out again, they're like, oh look, we count this as another delivery. Classic Enron scheme.
That'd be an interesting way to game the system.
I mean, people done it before. You guys remember Enron?
Yeah. Oh yeah, for sure. No, it's actually a really good point.
Well, it's just like people buying followers and likes in their accounts just to pretend that they're going to the upside, and basically, in fact, they're not really. The quality issues and quality control from the Tesla cars have been known for quite a while, and that's this is not from today. I'm not sure if they're doing it on purpose, but I know for a fact that it's a kind of hit and miss. You can get something that is decently put together, or you can get something that was on a Friday afternoon just before podcast. People were rushing to get their ears in the podcast with us, and they just rush things out of the production line. Maybe that's the case. I don't know. I like to think that it's sometimes a hit and miss, but nonetheless, we're still talking about something that, if you only look at earnings, I think it was pretty much what people were expecting, although they blew it out of the park. It just remained flat. And my question is this: I mean, because of the fact that it's remaining flat, we've seen that sometimes where it stays flat and everyone is like, oh, why? And then it starts pumping afterwards. So I'm just trying to be careful here. Folks, premiums are still going to be extremely high, even today on Thursday morning. If you want to play Tesla, you have to make sure that it's going to be in the right direction, and usually they are very good at that. They're going to keep it flat just so the premiums are just getting destroyed over theta, and then it's going to make a move either late on the Friday, and when no one else is in the play. Apple. I don't particularly play Apple a lot, but what do you guys see with the earnings coming up? Yeah, go ahead.
Yeah, well, no, I was just trying to think about that one. I mean, we all know that they've been hit by some of these supply chain issues as well. But at the same time, everybody else has been blowing out earnings for the most part, or coming back with very positive results. However, that hasn't, for the most part, as positive as the earnings might be, it hasn't really correlated to much in the way of a sustained upside move for any of these tickers. I mean, Microsoft, dipped real hard, came right back, and then faded off. Although we also had FOMC and that market sell-off contributing to that some. Same thing with Tesla, right? I mean, Tesla essentially wound up flat, even though their earnings report was generally good. But I think we're just still at a point where a lot of investors, whether they be institutional and I think even retail at this point, are starting to see that some of this stuff is overvalued and we can't just pump it forever. And I think now that people are starting to see the opportunity to get things on sale, now they're getting maybe a little bit greedy about how cheap how much of a sale price they want. But if that happens, everybody just continues to hold off on buying, and people continue to, take these small profits, or take, profits that they've been sitting on for quite some time, because they just don't see, a lot of near-term upside, and they think that they'll also be able to get back in for cheaper. I mean, we could see things continue down. I mean, again, I'm overall bullish long term. I just think that the next probably 4 to 6 or 8 weeks, we'll probably test a little bit lower. I'm watching a similar level to what you guys are. For me, it's 416.38. If we dip below that, I think we go on to test those lower levels down in the high 300s, 385 to 395 area. And then, if that doesn't hold, I'd be looking for 340 to 350 area.
Okay.
So for Apple, I will say this though, they are expecting a record quarter this quarter, and last quarter was one of the first few quarters that they actually missed in terms of revenue, because they had about $6 billion impact in terms of supply chain constraints. So last quarter they pulled in about 83.4 billion, and they said they could have made more, but they had 6 billion, impact because supply chain was just so crazy, and I don't think that eased up at all yet either. So I wouldn't be surprised if supply chain hurt them again. However, their China sale has been doing really, really great. They've been like growing like crazy over there. I wouldn't be surprised to see them grow even more there, but it's just a lot of uncertainties. And Amazon also guided pretty ugly too for this quarter. I've never heard this from Amazon before, but uh, coming up for this quarter's earning, they expect to actually break even, um, instead of making money for once. So I think
I
it's
was
really going to depend on market direction.
I was sharing in chat yesterday. Someone was asking that I think there's a new regulation saying that they're not allowed to say sold by Amazon or Amazon product or whatever. But I was sharing the fact that, long story short, there are many things that even if you wanted to go and buy in a shop, it'll take you forever. You'll go from shop to shop. You'll drive half an hour in one direction and half an hour in the other direction just to see if they have it in the shop, and eventually they don't, just to gather the 3 or 4 things that you need, while you can just open up the Amazon app and basically 5 minutes or 10 minutes later, you've done all your shopping and it's delivered the next day. And I believe it's 55% of all online sales are gone through Amazon. So this is a huge number. I know they have a larger competition, obviously. However, they're still ahead of the crowd with many things. I'm not sure if you guys are using their TV app. Was it called Amazon Prime or something? The app itself is, I don't know. I don't really like it. Many people don't like it either, but content is okay, and I think they're making their way and providing competition to the other companies, diversifying their income, and I think cloud business is also in their field. So, wasn't it last earnings or 2 earnings ago that I think the cloud business was higher than the revenues from selling things online? Was that correct, 007?
Yeah, I mean their cloud revenue is always their best performance sector.
Right. So, long story short, keep an eye on that one. I think it's. Oh, I used to say that tech kind of likes the 200 EMA on the 5 minute, and basically it's sitting right there. It had a hard time to cross it, and this morning we're still opening slowly but surely higher than yesterday's close. We're not out of the woods yet. I think SPY has a very strong line at the 437.82 ish. I don't want to step on JTW's feet here, but on a SPY girl. But it's a line that I have in my chart. I can share it with you. in a second. Other than that, what I'm watching is we played CVS yesterday. It worked well. I think it's still opening in the good direction. Volume was extremely high at the end of the day. It picked up from a low point pretty much where we entered in the first place, and then it went up to the 105 again. So I think that's one to watch. We talked about the defense stocks. I think we're not done with that. Early in the week, we talked about all the, and that was last week as well. We talked about all the energy sectors. So XOM, CVX, SLB. I know I'm going a little fast here. So it's Exxon, which is XOM, SLB, CVX. All of these should see more upside, and I think SLB has room for a rise in the 41s or even higher. I believe it's opening in that area this morning. So I'm keeping an eye on those. I also like. I want to be careful because I think SPY has gone up too fast, too quick pre-market, and probably needs to rebalance. But I also like NVIDIA. NVIDIA has been acting pretty strong lately, and I believe that if we cross the 436-ish line, or the 36.47 to be very precise, if we cross that, we could see more upside. But the supply chain issue that will be probably mentioned in the Apple earnings will affect many other tickers, I believe. So this is to be followed, and because of the weight of Apple, you all saw the initial reaction on Microsoft earnings. The market went exactly in the same direction, so it started pulling back. Market started pulling back, and then as soon as we had the guidance from Microsoft, it had a U-shaped recovery, and it just started to move to the upside after that, and so did the market. So keep an eye on those for movement. And there you go, NVIDIA. I was mentioning the line, and you see just 5 minutes before the bell, it's hitting precisely the line that I was telling you. So this is a one that I'll be keeping a very serious eye on, and I don't know, it's just rising. This is why I was looking at it. Oh, it's off. 237. So then this is it, folks. I think we're 4 minutes before the bell. I have yet to post the watch list in the watch list channel, but I'll do so in a second. And thank you both for being with us. I know it's a very full morning of information, but thank you for sharing all this knowledge with us, both of you. 007, JTW. Wish you a spectacular day.
Thank you for
Gentlemen,
having me on.
Enjoyed it. Yeah, absolutely. Thanks for joining us, and obviously wish you both well today, and same thing to all of our listeners and Extra Trades members.
All right. Now, to all the new members, trialists, people that are new to trading, make sure to understand that this is a business that needs patience. It needs maybe a longer term knowledge gathering. You need to understand the market, but more so, you need to understand yourself, because it's not a lottery. You have to. There's no one good recipe. You have to find a recipe that works for you. So it's you and a recipe that will make it all work. So take your time, paper trade, write it down, see what works, see what doesn't, and eventually you can dive in slowly. You have to find a way that works for you. So keep up the good work, the good work, folks. Make sure to ask questions around, and we want you to succeed and not just hit lotos. So stay safe and have a good one.
Have a great day, buddy.
Take care.